Refinery is undergoing a significant upgrade set to boost its nameplate capacity from 650,000 barrels to 700,000 barrels per day by Q4 2025. Meanwhile, the Nigerian National Petroleum Company Limited reported a profit after tax of 905 billion naira for the month of June, down from just over 1 trillion naira recorded in May. However, statutory payments rose to 6.9 trillion naira into the Federation between January and May 2025. Chukwemeka Osuzu, the senior associate at AO2 Law, joins me now to unpack these developments and what they signal for Nigeria's energy economy. Thank you so much for your time today, Chukwemeka. Let me first start with the upgrade that we're seeing playing out here from the Dangote Refinery and the announcement and the impact that you say the refinery has had on the energy economy here in Nigeria.
Kenneth, thank you for having me. So certainly the Dangote Refinery has played a significant role, particularly with respect to the reduction of the prices of refined petroleum products. What we've seen since the refinery has come on stream is that there's now local participation in the refining, more active local participation in the refining sector, and that has had the multiplier effect of leading to a marked reduction in the prices of refined products that perhaps you and I access at the pumps. So the announcement by the refinery that there's plan to increase production or to increase its refining capacity by about 50,000 barrels in Q4 2025 is certainly one that the market is looking for.
Yeah, interesting times for the market there. But when you look at what's playing out with the local producers, local importers, and the dynamics at play here, in the medium term, how do you think the market's going to hold up to this? And also, how's that going to impact the local refinery, other local refineries as well?
Okay, so in terms of medium-term effects, what we anticipate is that it will likely lead to further reduction in prices of refined products. It would put significant pressure, if you will, on importers of refined products, because what we expect is that by Dangote Refinery increasing its local capacity and doing that at a slightly lower cost than the importers, it's going to translate ultimately to a reduction in prices of refined products. Then, hello, Kenneth?
Yeah, I can hear you. You can continue.
Yes. So I was saying that it's most likely going to result in a reduction in prices of refined products in the medium term.
All right, well, let's get into the NNPC, and we've seen that monthly report summary come out from NNPCL. For me, I would say it's quite good to see this level of transparency play out from the NNPC, and I'd love you to speak to that and the performance that we're seeing so far for this month, for the month of June.
So the transparency is expected, given the reforms that the Petroleum Industry Act, as you know, of 2021 has introduced. The NNPC has now metamorphosed into a private entity, if you will. So that ultimately entails some reporting obligations that perhaps it may not have had when it was operating as a government agency. Right? So it's definitely a laudable one to see that we are recording profits, that the NNPC is recording significant profits, as you mentioned, just shy of $1 billion. So definitely hope that we'll continue in this trend, and because that ultimately is also going to impact the other segments of the sector as well.
Yeah, because when you look at the oil and gas space, quite a lot of the word uncertainty has been in the air when you look at the global dynamics. And I'd love you to speak to that, the demand and supply dynamics we're seeing globally and how that impacts us here in Nigeria.
Okay, so certainly there's been a lot of uncertainty in the global oil sector, largely attributable to the unrest in the Middle East, part of it linked to the various sanctions that have been imposed on Russia by the EU bloc. So as recently as Friday, a new suite of sanctions were imposed on Russia. But what I would say has impacted crude price of crude, global prices of crude the most significantly in the last few months would be the unrest in the Middle East. So, for example, recently there were drone attacks on oil fields in Iraq and in the Kurdistan region. So that region accounts for about roughly 280,000 barrels oil per day. Because of those attacks, production has reduced now to about 145,000 to 150,000. So nearly a 50% reduction in production from that region. So that has introduced a lot of uncertainty into the global oil market. But having said that, it also presents an opportunity for us in this part of the world to be able to leverage on the shortfalls that that reduction in production has created to be able to ramp up production locally. And if you look at the recent data from the Nigerian Upstream Petroleum Regulatory Commission, as at June, we met our OPEC quota of about 1.5 million barrels per day, and it is hoped that that trend will continue as well. So while there's a lot of uncertainty globally, it also presents some opportunities for us locally.
Definitely opportunities in the markets, yeah, especially for our local players as well, who are also looking to expand, like Owando, with plan to raise capital there. But thank you so much for your time, Chukwemeka Osuzu, there, the Senior Associate at AO2 Law.